Hey everyone, and welcome to the weekly review. This week we start off with macro. Next week we have the next CPI print, and this is US CPI in blue here. And then we have copper in orange. We have US gasoline prices in yellow, and oil in white. And it's a bit noisy. I can take out some of them bit by bit. But we can see that individually they are highly correlated with both each other and the US CPI print. Oh, actually, I left oil. Sorry. Okay, and like this. So this is oil versus CPI, and oil has turned back up. Then we have this one is the base one, so I can turn it off. So gasoline prices, same here, and the correlation with gasoline prices is very, very high. Um, and copper as well, which copper has stopped dropping, is making higher lows. It's in consolidation here and might just break out to the upside very, very soon. And when we look at the Fed's expectation for CPI, this was for June, and we have a very large underprint, 2.96. But what do they think will happen next? And this is the next CPI print. What and it was 296. If you didn't catch that, and the expectation for this month is 3.37, so much higher. And the expectation for August, actually for July, that will be the August print, is 388. And why this is happening is a combination of the base effect going against us and most likely a resurgence of inflation. This is a video for Dharma Trade on Twitter, and what he does here is compare current CPI with the CPI from a year ago. This is basically the base effect. So when this number is high, it means that CPI a year ago was very high, and because CPI is a compounding metric, the print for this year has to be much bigger than last year to get a positive print, like a not like a month over month print. So what we can see here is for June, when we got that 2.96 print, we had the highest year over year base effect that actually brought CPI down. And what happens next in July and August? We actually have negative base effect prints because if you remember, the peak last year was in July. I think July was the peak print. After that, it started going down. So we have a couple of months in which the base effect goes negative, so it goes against us. So the CPI will have to drop even more than usual to for the year-over-year number to drop. Then we have a small bump, and then we have the base effect going against us again. And this is why the CPI will be dropping. Um, will be going up. Sorry, going up. Now let's also look at the month over month. And the previous month over month was 0.18, very, very small. And what's the expectation now? It's 0.4. And for August, it's 0.61. So CPI is coming back up again. Who could have thought about this? Uh, then let's look at the latest GDP now, and it's an incredible 3.9%. Uh, this is crazy, crazy high. Like this is like emerging number level emerging marker level numbers, and it's for the US. With this kind of GDP growth, it's impossible for inflation not to come back again. And this is all because of the deficit. The deficit is like 8%, They're spending like crazy in the US, unprecedented outside of war spending or outside of economic distress or some kind of negative event. We can see this in the GDP numbers, and we can see it in the CPI numbers now. Now we look at what's the market expectation for next week. The Fed nowcast says 3.4. The forecast is 3.1. Consensus is 3.3, which is more closer to the Fed. So I would expect we get somewhere around consensus, maybe in between 3.2 and 3.4, which is a neutral number, but it might scare the market into dropping as well. This being said, let's go back to TA. Have to take this out. Only oil now. And we're at the market. SPY. Uh, okay, recap is red week, kind of impulsive and could still continue for a bit. Uh, Not a lot, I believe. I think we may continue down on Monday, but then we turn up starting Tuesday and go up. And my bias is still bullish for until the end of the month. That may not prove to be true. It depends on the market's reaction to CPA, but we will see. And I'll explain why. Let's turn on the what we need here, and is the August range and the Q3 range like this, and this is the target for the top blow-off move. It got offset for some reason on weekly, so let's go back to daily. This is it. Okay, and we zoom in now on SPY. Uh, First week of August, so August high and August low is actually last week, and we see that we dropped, then we back tested the middle point, and then went down again. Or actually, it's this horizontal level here that we back tested. This wasn't the midpoint at the time of the rejection. We closed below the Q3 mid, and we're probably going towards the Q3 open on Monday. I would expect another gap down. Didn't think we would get that reversal as we did at the end of the day on Friday, not the end of the day, but during Friday. VIX closed at the highs, but it's very close to overextended. So I would expect VIX to spike again, maybe go to 1852. This is a level for VIX. It's this one here, 1850, and that's kind of it. This can go a bit lower. 20 is fine. So anyway, I expect VIX to spike up again, go here, then get rejected, maybe do like a rejection candle like this with a high wick above and actually go back below this point and close below this point by end of the day. RSI is getting very close to oversold, and as you can see here, we very rarely hold on to gains once we get to this point. Exceptions are really explosive moves, but we're not getting those anytime soon, I believe, or not next week at least. So we should see the same kind of pattern. As soon as we get above this 70 point in RSI, I think we get rejected and we stop. And the expectation is that we get a turnaround Tuesday kind of move. So Monday weak, we go for the lows, then it stabilizes. We reverse intraday on Monday, and on Tuesday we actually go up, we gap up and start going up a lot. Now going back to SPY, another thing to note is that we closed below the 20 MA. This is kind of a bad news. Bollinger Bands 2 is going to be at the Q3 open, so that's why I think this horizontal support plus Bollinger here is going to stop us. So I don't think we get to the 50 MA yet. So Zoom in again, Android. Take out them in the moving averages. So expectation for Monday. Go down. This could be with a move up as well, so something like this. This was the breakdown point, and it could go like this. We go down, and then we consolidate here for a while, and on Tuesday we start going up, and don't look back. Most likely because of CPI, we might get another rejection, but that's just a higher low. It shouldn't affect us significantly, and that's kind of it. Another option that could happen is just we don't go for this Q3 open. We just bounce here again. The consolidation happens here, and then we get the turnaround Tuesday effect in the same way. This is also a relevant point, so I would expect why I think we keep dropping. I think we will bounce on this trend line. This doesn't have to be exactly as it is. It can be a bit higher, something like this. I don't know exactly, but you get the point here. So this is my expectation. We drop a bit on Monday and then turn around Tuesday and we go for the highs again. Potentially go as high as 470 by the end of the month. But the lower we go, the less chance for this to happen. Like, let's say if we were to go to below 440, I think a retest of the high would be more than enough. So if we do this, it's like this. If we do this, maybe we make a slightly higher high, maybe hit this level here, which is 462, and then turn back down. So I don't think we get to 470 that easily moving forward. Another reason why I think we bounce is mega caps, actually Apple. Apple had a huge breakdown, an impulsive move down. Already RSI is getting too oversold, and Apple very rarely goes below this oversold level. And on the 4 hour, this is the second lowest level in history. The only time it went below this level on the 4 hour RSI was, let me find it here. Again, it shows quite quite a bit of weakness going this low in RSI, and I would expect it to play out in a similar fashion to this. So that's why I think I said I think on Monday we bounce up a bit, get rejected again. So we are at the same level for Apple as previously, as the previous all-time low on a 4-hour RSI, and we can see that it had a feeble bounce. Then it went for new lows, even though RSI made higher lows. So this is kind of the same thing I expect here. And let's look at the current day and see what Apple could be doing. Daily, let's turn on moving averages, and we are below the 50. Wow. Uh, and we have at 176. This would be a bit higher, but let's draw as a horizontal level, which would be this. Yeah, okay. And this, and it's already at the previous all-time high. So it closed at the previous all-time high, more or less. Now we zoom in. This would be the demand zone. Lines. Then this gets adjusted to be here-ish, like this. And this gets adjusted to be here. That's the level. This one we don't care about. So what I would expect for Apple, if it continues to be weak into Monday and gets us that red day that I think we get on Monday, is it does this, gets to 184, gets rejected, and then goes all the way to this area, and then bounces. All the while, like this recovers a bit, and then does this, just like last time. And even though price will fall, and then it just goes up from here, something like this. This would be Apple. Yeah, that's kind of it for today. I'm a bit concerned about the VIX, like I said, but I think everything is aligning um, for the type of move that will make the market go back up again. So VIX oversold, market overbought, or getting close to to overbought. Apple getting close to oversold, and the only reason the market dropped this much is because Apple dropped a lot. And even in this scenario, we didn't really drop that much because Amazon, the combination of Amazon beating and Apple dropping saved us a bit. So yeah, and the thing, yields getting rejected close to the previous highs. For the 20-year, we got rejected at 4.5. I'm not sure what's going to happen with them. Like, in theory, they should be going down, but if the CPI prints coming hot, I expect the Fed will hike again in September. If the Fed hikes again in September, the market will probably get scared that we're getting a recession again and crater yields, but maybe they don't, and they actually price in the longer end of the curve to go a bit higher. So I got into a TLT position around here, waiting to see what happened. It's a long term, like 2025 January. So that's a I'm gonna hold that one for sure, and that's kind of it. Okay, so next up is the weekly selection video. Have a bunch of stuff for you. Have a good week. Bye bye.